Hey guys, we're live with Kevin Green. This is the macro report at the end of the week. So at the beginning of the week, every Monday at 11 a.m., we have the commodity report where Kevin and I go over commodities, what we're seeing going on through the last couple of weeks, the last month, what we're thinking going forward. You get to hear my perspective on what I'm getting signals for. You get to hear Kevin's perspective on the fundamentals. So definitely check that out every single week. Lots of good stuff on there. And then every week on Wednesday, I also put out my commodity report, just basically going over a bunch of stuff. But man, Kevin, there's been some crazy stuff in the commodity space at first. I just said, let's keep it macro focused. And then I jump into the commodity. But also, like, we're just seeing some very interesting things. This end run in heating oil that's getting right back to those levels you were talking about. I guess let's just start there and talk about that a little bit first. We'll get into it more in depth on Monday, so you guys can tune back in if you want. But Kevin, what are you seeing? Why is heating oil made this huge move from basically the beginning of June to now? So what are you seeing in heating oil, energy in general?
Yeah, for heating oil, it was probably the biggest product. And when we talk about heating oil, I always have to preface it by saying we're talking about diesel too, right? So it's one of the main products that initially saw the first inventory builds, and then we saw a significant sell-off when it came to prices. But when you're looking at the product mix right now, or the refined mix, you're actually starting to see those supplies starting to tighten up here a little bit. Now, gasoline has a little bit more to go when it comes to the inventory build and trying to, I would say, burn off some of the excess inventory that's there. But heating oil, once again, was one of the most oversold markets. And then with tighter supplies and the thought process that over the next 3 weeks, we'll probably be at peak refining rates at around 95, 96%. We should start seeing those going down. We should also see that coincide with inventories across the board, from crude oil to gasoline to heating oil, starting to draw down as well. That should actually tighten up prices. So it's a nice pop, hitting an area of resistance right now, actually on an intraday basis at that 200-week moving average, and that's sitting at around $2.56, let's say $2.57. So we did see a little bit of a pullback there, but you're starting to have a little bit more optimism when it comes to the energy trade. I think it's more, it's not only just based on what we are seeing from the Asia Pacific markets as far as economic data. Tokyo CPI was actually hotter than expected. We have China PMI data, not only for manufacturing, but also for services. That's happening at around, that's happening on Saturday as well. That could be a little bit bullish. And so let's see if this is going to be the time that it turns around. Seeing another consolidation back to 240, I don't think is a huge deal if you see that, and then officially try to break out. I think that would be the key area right now here for heating oil.
Yeah, I mean it's interesting, the whole commodity space. When we look at, and that's the thing about it. Like, if you understand macro, like any macro trader has had commodity trades because commodities are connected to macro, connected to markets, and so on. So as we're looking at these things, we get into a feel of what's going on in the U.S. economy, what's going on in the world. Something that's kind of interesting that we keep, I keep paying attention to, especially seeing this heat wave in the U.S. I'm always looking at weather patterns, seeing what part of the cycles we're in, and so on. And looking at this situation going on last week, we had all these record high Junes, and then last year was a record too in June. So 2 years in a row. But this year, basically, I had plants in the backyard that just literally, if they didn't get water, they just scorched. Like they're gone.
Yeah.
They evaporated. So this is a very bad environment for farmers. And somebody asked me to specify earlier, what I meant by costs going up. And that I'm not saying the exact commodity is going up or their energy prices are exactly going up. I'm saying the amount of water, the amount of time, the amount of effort that you have to put into keeping your crops in shape in this type of environment, that goes up right now. So you're going to use more things like natural gas, you're going to use more oil, you're going to use all of these things. So if you want to keep your crops moving. So Kevin, what are you seeing? We mentioned before, and this is something we talked about a million times, and you always say, don't let me forget about North Carolina. And
Yeah.
so I was doing this
Ooh.
report recently, the one on Wednesday, and North Carolina came up a bunch of times. A bunch of people talking about their crops, and just basically like they've never seen an environment like this. One guy was actually going like completely off the deep end and being like, "We're all gonna die. We're gonna run out of water." Like that's how they feel there.
Yeah.
It's that bad there. So what are you seeing in North Carolina, South Carolina? What's going on in that area?
Yeah, so it's not good. So we have the most recent report that we had was actually on the 24th. So it was on Monday, and we talked about these crop conditions um, within North Carolina. No matter if you're looking at cotton, which we saw a significant drop there, if you're looking at some of these other products, mainly cotton is kind of the bigger focused ones here. But North Carolina is experiencing some pretty bad conditions right now. And actually, last week we saw a decline of 26% when you're looking at the crop conditions from the good to excellent type of level there for North Carolina. That's not something that you want to see. Let me bring up this report 1 second. My computer's going slow. So that's not really what you want to see. So what's that going to mean? That could tighten up supplies, especially for quality products that are out there, quality cotton, things of that nature. That could actually stabilize prices. But we got to also kind of just caveat that as saying, these weather conditions, they cycle out too, right? So when we first started the year, we actually had pretty severe drought conditions in the Midwest to start off in February and January when we should have actually a fair amount of precipitation. And now that's kind of abating when you're kind of looking at the Illinois area. But the concern right now is that you have heat waves, you have sporadic rains, and then you have the humidity. And the humidity itself can actually expand diseases for crops. That's the problem. You want to have either dry weather with enough moisture within the ground, or you want to have wet weather at one time. You don't really want to have this like erratic fluctuation when it comes to weather patterns, because that's where you kind of get the crop failures. And I'm growing potatoes. I was growing potatoes. We had the same situation. I mean, it's been raining here literally every single day for the last like 3 months, and then it gets really, really hot. And then at night it gets really, really cold. So you have frost conditions too. So all of these crops are really kind of experiencing the pain here in the near term.
No, I mean it's across the board in the United States, and when we kind of look at all these things, we're seeing that it's not showing up in the data just yet, and that's the thing that's going to be important. This is a thing that I keep bringing up. Like, hey, I brought this up months ago. In the middle of the grain rally. Hey, I think July is probably the time. Like late June, July. And really, I see a lot of these things starting to bottom right now. And it's starting to make sense because the data is going to start to make a little bit more sense going forward. We're just not seeing, the setup and the data that we'd need to see for people to go, hey, it's time to really start buying. The producers are seeing, like if you talk to any of the farmers, they're all seeing problems here. Like a lot of them are seeing problems. This is terrible conditions for a lot of things. You can have blight, you can have diseases, you can have all types of things can happen in this point. And basically what happens is the leaves start to get messed up. You get bugs start to come in, start biting the leaves. Next thing you know, you're getting into different situations with blight and so on. So, I mean, we're kind of seeing all these things kind of happen here. And so I'd like to know, going forward, what are you seeing in the grains? Do you think that wheat could make a stand here? Do you think that corn could make a stand here? You mentioned Monday a little bit about corn.
Yeah. I think corn probably has the biggest outlook out of all of them right now. I mean, it was in the past around wheat because you had some of the geopolitical tensions, and we also had some weather conditions that was putting a little bit of pressure within that market. Corn, when you're looking at ethanol production, that's kind of really where that thesis comes into place here. So if we are seeing a bottoming in heating oil, if we are seeing a bottoming in gasoline, and we start seeing an uptick in ethanol production, then that should also then draw on the corn market as a whole. And I think that might be a key one here. But we cannot ignore the fact that we are seeing, and we are in downtrends, and we are, for the most part, basing out when it comes to corn. Now, for wheat, wheat moved up 4% yesterday. It was actually pretty remarkable. It's up. It's having a very erratic trading session. The area of support right now is sitting at around 556 cents. So that's the area you kind of want to be mindful of and focus on. The condition, The opportunities of the environment when it comes to grains is going to be very murky, especially after yesterday's presidential debate, right? If we do have this expansion in tariffs going on, especially when you're looking at China, we tend to see reactionary tariffs being put on our products. And the biggest risk that we have right now is the agricultural system here in the United States, or our ability to be able to export. We have probably the best grain quality that's out there in the world. And that's why we actually have a price higher than what you see in South America. But when you put on additional tariffs on other countries and they put additional ones on us, then it becomes a little bit more difficult in order for us to try to export. And the export demand is really where grains thrive for the United States. So I think that's going to be an area that I'm kind of really focusing on to see if there's going to be not only just the tariff environment, but also if there might be an acceleration of purchases. That could also be a new thing too, an acceleration of purchases for new crop in order to try to get ahead of those particular tariffs that could be put on China or whoever else. I think that's going to be the key. So I would expect a little bit more choppy action here. But when you're looking at the price action, a lot of these grains have bottomed, and you just need that one spark in order for this thing to go. We are seeing wheat bottom here. I would say your resistance is going to be the 200-week moving average, which is 716. It's about 34 cents. So that would be the key area, and that would be actually a nice little bump up from what it's trading at right now. So more upside risk and downside potential right now for grains.
No, I agree. And, going to the COT reports and just the producers, we're seeing the same thing. They are starting to come in, but it's not as heavy as I would have expected on this pullback. But once again, those things could change as data comes in. Right now, we're just kind of looking at this and going, like, I really do think at the end of this month into next month will probably be when this rally starts. I did some extensive research. I'll actually send that to you because I kept some of that internal. So I'll bounce it off Kevin before I put it public because I don't know how ridiculous some of it is. But what I like to do is go through certain, and this is something to just talk trading wise. I like to go through certain years that are comparable. Certain years that maybe you have a heat wave, certain years that the weather patterns are very similar. And then kind of figure out what happened or the end run that happened, the most down days in a row in wheat and then go back and look at all of the periods that has happened. Right. And I found that, 2010, this happened, and it was almost like they would flush out basically all the producers would either front run seasonality or front run it in another way. And basically you have this huge down move in wheat, and then that usually shakes everybody out. And then the rally usually starts. So I just kind of went through that. I'll see if I can share that. Maybe we can talk about that on Monday. So getting into let's talk about stocks. The S&P 500, the NASDAQ. Let's just talk big right now. You also mentioned some good levels yesterday. I saw your post about the levels you were looking at. And basically, looking at gamma walls and kind of figuring out where it's going to stop, where this support could be, and so on in a short-term trading session. So what are you seeing in the S&P 500, the NASDAQ in the short term, Kevin?
Yeah, so it's been like a boring week when it comes to trading action. And so today, we obviously had PCE numbers. Those came in line. We are seeing that disinflationary trend that the Fed wants to be able to see. So we had this compression over the last week where our downward buying area was around 54.50 for the S&P 500. Let's say 54.50, 54.55. And then our upper wall was around 54.75. But going into this print here today, we actually had some bullish options positioning. Obviously, we have this call wall that's happening at 5,500, which is literally what we are trading at right now. But we broke through that earlier in today's session, tried to test the 5,520 level, and then kind of rejected it. There is pen risk at 5,500, so we might just have a boring day as we kind of level out here. If not, we try to test that 55.25 area again. I think that we still have some more room to run to the upside here. Any type of reversal, sharp reversal, would probably result in us actually gapping down about 54.60. So I'm keeping my eye out on that. But it's been boring, and without tech, we're not doing much without tech, and that's one of the key ingredients for us to be able to have these scenarios. Now, we do have a quarterly expiration here today. We have the JP Morgan collar position higher strike, which is going to be the call, is really what you're going to focus on. 55.70. It would be remarkable if we actually got up there today, but that would be the area that kind of really focus on and hone in on for right now. So yeah, those are the levels. And then, you know, the NASDAQ, we're just seeing a lot of churn when it comes to tech, but we are also seeing a little bit of strength in certain companies too. So it seems like, you know, one day we got Amazon killing the game, and then the next day we got Apple killing the game, and then Nvidia's powering higher, and then Nvidia pulls back and somebody else is. So that's kind of what we got. That's what we have. Semiconductors also churning too. AMD is like killing it today. AMD is up. Let's see. Yeah, AMD is up 2.3%. I mean, it was trading all the way up to $166.45. Now it's trading at around $163.14. Let's see once again if it can power higher here. So that's kind of the landscape that we're looking at right now. 55.70 is your big wall today if we were able to get it. And once again, that would be 70 points up higher from here. We're already up 20 points on the session, so it's a very tall order. But anything's possible when you have these quarterlies and you have, you know, end of month, end of quarter rebalancing that's taking place for a lot of institutional funds out there, like yourself.
So, I mean, it's also really interesting if we're looking at it on a 1 month time frame. Tech being the leader, up 6% over a 1 month time frame, but crude oil right behind it, up 5%. There's very few times that I've actually seen that in a 1 month time frame. It's very rare that crude and tech are both kind of together as the leaders. The energy sector has been the laggard though. So it's another question for you. Do you think energy could catch up here, or do you think that you know, the better trade is to still be in oil?
Yeah, I'm always going to say that's just me because I'm a commodity guy, right? The better trade is always going to be in oil. Directly.
That's why we get along. It's always, you know, the better trade.
For energy, it's a tough trade because like you don't have the attractiveness of yields anymore, the dividend yield anymore. So like you're really making the energy trade that when you're looking at stocks to like really hit it, because the energy stocks have actually done pretty well if you're looking at a 1 year time frame. And so knowing that type of environment, knowing that crack spreads have kind of deteriorated, I think we're trading at around $22, $23 when it comes to the 321. You want to see that more in the $28 to $29 level. That's where you can kind of see these companies really powering higher. And we use the 321 crack spread in order to measure or gauge marginability for their products. And so I think once we get into the earnings season, you got to be very careful and very tactical. I think the refiners or the midstream players are going to have some headwinds, especially when you're looking at the chemical business, as well as when you're looking at the gasoline markets, as those spreads have definitely softened here. The explorers or the exploration companies, they might be able to fare out because we have seen rigs kind of coming to the downside here. And there might be additional opportunities in the Permian, which from a cost standpoint is a little bit cheaper than maybe some other operations, especially when you're looking at offshore at this point. So they might be able to fare. But when I'm looking at energy, if you're looking at the XLE, which is a horrible index, you're basically looking at Chevron and Exxon. You have this wedge pattern that's kind of taking place. Now that wedge pattern can also be an indication that we might have a consolidation and a break to the upside. The valuations really wouldn't match that. It would be at a pretty premium valuation compared to other cyclical industries. But we either have that breakup or we have a breakdown. And if you're kind of looking at the weekly chart, looking at RSI, CCI, stochastics, it kind of indicates the fact that maybe energy stocks actually do pull back here in the next couple of weeks. So that's kind of where I'm at. I would rather, you're not going to get the energy move and the energy stocks to move without crude. And so go for the direct play. You can get ahead of the move if that's going to be the case. And I want to just kind of just mind you, I am like cautiously and have been cautiously optimistic when it comes to crude, right? At 200-week moving average has been something I've been talking about here. This is a nice bounce that we are seeing. 82.5 is the area of resistance that I see from a technical standpoint. That would be nice to be able to kind of pull back, consolidate, and then try to move higher here. 80 to 85, I think, is a reasonable range. Once again, actually, I probably would say 78, 78 to 85. It used to be 80 to 85. That's been kind of my target area literally all year. Not even all year, is the ending of last year too, right? So yeah, that's my thought process. What do you think?
No, it's the same thing. I'm looking at the chart of oil. Just looking at the chart of oil, I'm seeing the same thing as like really to get a big move, we have to get out of this range. Like we
Yeah.
just have to break out of it, make a big move, continue higher. And as long as we're stuck there, it might be rough. We could see, and we do have some. And I'm also optimistic on these things. I'm also long the energy sector. But there's risks. The risks are, we have elevated spare capacity. We have slowing economic growth. So all of these things kind of together are telling us that there is some reasons to be cautious here. And we can continue to kind of be cautious, but also take the trades as they come. And that's kind of what I think in the summer, and I just wrote about this the other day, is like the summer is always tough. You have all this churn in the market.
Yeah.
And as you have all this churn in the market and false breakouts over and over again and frustration, like you've got to start to really channel in on just going, okay, maybe I'm going to slow down on trading. Maybe I'm going to cut my position sizes. There's a bunch of things you can do. For me, I just might go smaller in size. I'm still going to take all the same trades because I think there's plenty of trades to take. It's just going to be a lot thinner. It's the same as like you're seeing breadth bad in the market. You can also see breadth looking bad in the commodity market, where you only see a few commodities moving. Last year's great example. We had cocoa, orange juice. I think it was cattle. That was it. That everything else was kind of just in a downtrend or chopping around. So really think about it in a couple different ways. Think one way to think about it is I can just take my money, put it to the side, take a vacation, or you can just cut down your position sizes, do something a little bit different. I think it's the better play is to continue to trade, cut down your position sizes, do whatever you do, but keep in mind that there is probably a move coming. And most of the time, if you're a trader and you're getting ready and you continue to follow your plans and your systems, you're set up for that next move. And that's a hard thing to do, is just continue to have faith in your system as we're getting frustrated, as you're dealing with all this crap, and know that there's a move coming. I see that there's a move coming in oil too and in energy, but I don't see the right fundamentals to back up that move just yet either. So we need to keep paying attention to that and kind of sit on our hands at times.
Yeah, and seasonally, the fundamentals should align in the third week of July, right?
Mm-hmm.
Or 2 weeks. We're actually kind of like 2 weeks out, where, in my opinion, it's gonna be make or break for the next pop to the upside for oil. That's just my 2 cents there. But yeah, we just don't have enough. Going back to seasonality though, chop. We might see some chop, but just if you look at tech or the Qs or the Nasdaq 100. July is actually, I believe it's like either the number one or number two best performing month there. So
I think it had it all the way back to when the rally started in 2009. I posted about it the other day. I'll see if I can find that seasonality chart, but it was like 15 straight years or something of a move higher. So I'll try to find that.
And it's always tough too, right? Because tech's kind of like lofty, but you don't fade those trends. But yeah, no, I'm right there. I'm right there with you, man. Like I said, I think right now we're just kind of like in limbo. Some of these markets, especially from the commodity side, like grains, the headwinds going into it, right? The headwinds going into it, but it's very difficult to be able to say, all right, let me take that leap of faith. And when it does align, and you do have this situation where boom, like something happens with the crops. Once that does happen, you don't have to really worry about being too late. You just got to make sure that you have your risk parameters in place. That's the thing. Once you'll know the move once the move comes, right? That's how I look at it.
No, that's perfect. That's the way to think about it. Is you have to really understand that there's a couple things at play. One is we don't get paid unless the price goes up. I have plenty of beliefs on what's going on in the market right now, especially in the grain market, but I'm not just going to put on the trades when it's in a downtrend because I believe something. You have to have reasons, whether it's support, whether you're mean reversion, whether you're buying breakouts, whatever it is. You have to have those reasons, and you have to let the market confirm your beliefs. And yeah, I found that seasonality chart, that's something to think about for everybody going forward. We're about to get into that period in the Nasdaq. And so that's an incredibly bullish period. The Nasdaq it went up 100% of the time, and that was actually since 2008.
Yeah.
So I mean that's pretty wild.
Yeah. Yeah. You don't want to, it's hard to fade that. It's really hard to fade that. Well, yeah, man, I actually do have to jet, unfortunately, man. Monday, everybody tune in. Hey, I'll leave something to kind of nibble on here. This is a stock, but it's an LNG proxy I've been talking about and wrote about a couple of weeks ago here. Ticker symbol LNG, Cheniere Energy. Check out that chart. Things been basing, things been breaking to the upside. LNG I think is a hot one right now when it comes to export demand. We just had some positive developments of LNG operation to be able to move forward in Louisiana. That's good. And then also we have this kind of reshuffling when it comes to supply lines across the globe. So not a recommendation, obviously, but it's it's one of those nice consolidation patterns, nice little breakouts. 170 was the initial area of resistance. It's trading at 175 now. Very low beta name, like super low beta name. And if you're looking at trailing PE, which I hate doing, but if you look at that trailing, it was like 7. It was like a 7 trailing PE. Forward multiple right now is sitting at around 17. Maybe a little bit rich, but the thing is that they actually lock in very long-term contracts, utilize derivatives in order to hedge themselves. And so when you kind of have these pops in natural gas, it re-rates for them a little bit higher. So they have like these fluctuations. But I know we brought up LNG a couple of weeks ago, man, and that's kind of that proxy that I've been looking at here. And it's just a beautiful breakout.
Hey, Kevin. How's it going?
What up? What up? How you doing, Steve?
What did you say the price to earnings was? Because this is a secular leader, right, in the energy space.
Yeah.
Only a 40 billion market cap, but it's been a good stock for a while now.
It's the largest LNG exporter here in the United States. So, and there's not a lot. There's not a lot of exporters out there. So they literally have an edge on the market. And, multiples are kind of expanding out a little bit now, but raised their dividends, announced a buyback a couple of weeks ago. Their leadership team is literally like, this is what we're doing. We're not going to sell you any hype. And they've been killing it. But hey, I actually do have to jet though. So until next time, guys, I really do appreciate you, Jason. Steve, always a pleasure. And I talk to you guys most likely next week.
Great to see you, Kevin, man. Thanks for hopping on. Thanks for making some time, and we'll see you soon. See you on Monday.
Sounds good, man. See you.
Kevin's the man, dude.
Yeah, I'm glad he made it on for a little bit today. I mean, we just hopped through some basic commodities. I mean, just the macro of it really, because it's, when people talk commodities, they think like, oh, you're just a commodities trader. It's like I don't know anybody who's actually ever just traded commodities. I actually don't. Right. Most of the time, every commodity trader is into just about every other thing out there because futures it's a big market. So Steve came on, and obviously I had to bring him right up, even though you sent me a message to not bring you up just yet. So sorry about that.
You're not a good producer.
I'm a terrible producer. I have no idea what I'm doing here, if I'm being honest. I'm just putting stuff on. I'm a trader, I don't know anything else.
So I got excited when he was talking about LNG. Can we hit the chart? I think we just hit the chart, right?
All right. Let me find it. What's the ticker?
I got you.
You got it? All right. Yeah. But yeah, I haven't seen the chart of it. I'm a futures trader, so the individual stocks, people ask me people say tickers of things all the time when I'm on with you. I have no idea. I'm like, oh, what ticker is that?
Well, I get excited when, we're really lucky. We have this like great community, big network of smart people. We're always, on here talking. So when I hear one of my smart friends, call out a name that I'm also interested in, or in, that's good stuff, right? It's like supporting evidence. So this is a weekly candlestick chart with a price or a percentage price oscillator shown in the lower pane. So you see that little momentum crossover. Think of that like a MACD cross, right? Weekly MACD cross. But what's more important is the price chart here. This candlestick, this was last week or the week before. I think I put this out June 21st. This was last week. Let me double check. Yeah, we're getting massive follow through this week. So last week, the weekly candle engulfed, what did I say? 19 weeks before it. So that's 4.5 months of price action, all engulfed. And really, it was three trading days last weck. And then you're getting massive follow through this week, right? So this one's telling us it's heading back to these old all-time highs from 2023. And I think from there, there's plenty of more upside. So I think you could trade it out of this range back to the all-time highs. We're already, like I said, more than halfway there. And then I think from there, you probably get a little bit of digestion. You would expect some consolidation and then upwards and onwards. But my question for you, and would have been for Kevin too, what does this tell us about natural gas? Like, these guys are kind of just liquefying it and transporting it, from what I understand. Like, is this a bullish development for natural gas as a commodity?
So I think so, absolutely. Like I think there's so many things going on right now that natural gas is very important for. One, when you get into summer months, you start getting the air conditioning, cooling, and so on. Also, we have this crazy heat wave, and we had the hottest June ever, actually, for the second year in a row. So, it makes a lot of sense that natural gas could catch a bid right now for a lot of reasons, not to mention you're a farmer, let's say, people don't think about it in farming where they're like, a lot of them actually trade the natural gas futures. They hedge with those products. And the reason is because they have to use so much of it to keep their machines running and so on. So all of these things together, it makes a lot of sense. And I'm also I saw your chart and I was like, there's a massive band squeeze breakout on that chart. And yes. I went back, and the last time the bands have been that tight are actually in 2020. There was a time in 2020. Actually, that's not even as tight. Keep going back. Right before the crash, actually. So, and here's the other thing about it.
You're looking at the daily Bollinger Bands, 2 standard.
No, I'm looking at weekly, actually.
Wow.
They're that tight weekly. So, and then I also see it just hit a 50-day high. It is breaking out of that band squeeze breakout right now. So, I mean, it's a trade right now. Like I would buy that thing. If I was a stock trader, I'd buy that thing every day of the week. I mean, hell, I might buy it in my, my personal portfolio.
And you know what? I really there's like a certain comfort for me. I mentioned this at the top when I just joined you guys. When you can zoom out on a chart, and I'm sorry, this is a static chart. Otherwise I would zoom out and show it. When you zoom out on something like this one has been so good for so long, big time outperformer in the energy sector. Mm-hmm. And I would call it a secular leader. So typically you see these really strong long-term names start a new leg higher, right? Or start a new cycle. Like the strongest ones are usually the leaders out the gate. So I think it's bullish in that sense. And then I just feel good owning a stock that I can zoom out on a chart and just see it moving from the lower left to the upper right over time. And this is that.
This is that. And so I have a very crude chart. I didn't put any names on it or anything, but I just wanted to kind of go to that band squeeze that we were seeing, just so you guys can see what we're talking about here. And of course, right then I ran out of new slides. So 1 sec, I have to delete things. That was cool. I had a good lead up there going. Sorry, guys.
I'm doing slide deck maintenance too. If we keep doing the show every week, we got to bring Sam or Fonz on, and they'll run slides for us.
They'll do great. They're much better than I. So basically here, what I'm just saying is, you see this massive uptrend here, and I was just going to zoom in, and I zoomed out quickly just to show you guys what also Steven was talking about. So we see this massive uptrend here. Then we see consolidation sideways, and then we get a squeeze. Now at the end of this, we have a massive band squeeze, the tightest band squeeze we've seen since 2020 on this, and then it breaks out to the upside. Also, that's a 50-day high. You put that all together, most of the time this leads to a new trend higher. So I would say that you guys are absolutely right. This is a new trend starting. For me, like I try to, and this is always a cool thing to do if you're a technical trader. Something to think about is taking the name off of a chart and just try to look at it. take the name off of it and go, okay, what is this chart? What direction is it going? Like that's an uptrend to a consolidation to a new move higher. And if you're actually saying I'm a technical trader and I just trade systems and technicals, this is a move higher. This is something that you buy. This is something that you don't overthink and you just buy.
Yep. So these band squeezes are so good, Jason. How often are you using them, like in your trading?
All the time, every day. Every day I run those scans and run those algos and figure out where exactly the band squeezes are coming from. I even have it on stocks too. So I see that system actually works very well on individual stocks too. So, I mean, the reason why I started to use that system in the first place was I started to just notice it when I started to trade. And what is consolidation? Like, what is a flag pattern? Well, it's a squeeze. It's a volatility squeeze. Volatility is going down. The range is tightening. Same with the head and shoulders. Same with all of the patterns that people look at. And so when you see all those things kind of happen and you see a confluence of signals and then you see a breakout higher, that's usually telling you something. And using the bands means you can systematize it in a way that you can just run a system strategy, put it on rather than having to mark it out every time like a flag or whatever it is.
Yep. I also think there was an interesting confluence in the case of Cheniere where, we love it when there is supporting evidence across different time frames. The bands were squeezing on a daily and we're at, pretty extreme low level. Also on the weekly. Like, does that make you like it more? Something like that?
Oh yeah, I mean, for me, if I have call it fractals, we see multiple signals across different time frames. So if we see fractals, most of the time we can go, okay, well now we're able to kind of put this all together. We're seeing that there is a breakout, there is a 100-day high signal. There's this breakout. Yeah, that's the other thing I wanted to say too is that I did just look at it too, and there's a 100-day high on here. That's also very significant. So 100-day high, we're getting up and over that 200-day moving average right there that you also had on your chart. And we're seeing strength that's all together. That's something that you want to be a part of. And not to mention the energy sector isn't looking that great. So we're also seeing relative strength to energy, relative strength to the S&P 500 even. I mean, it's outperforming most of the things since it's had this breakout.
All right. You know what is strong right now? Have you seen the software stocks the last 2 weeks?
I have seen a little bit, just a little bit. So you're talking about IGV, right?
Yeah.
IGV, yeah. That's on our list. So IGV, yeah, very nice uptrend. Resistance, though, is upcoming right at the not about $90. So the $90 level is going to be resistance where it kind of stopped last time. Last time it stopped at 89.20 around there. So once again, it came back to the 200, and this is what you'll see a lot in bull markets, and this is a good sign of a bull market, even though people are going, it's not a bull market, it's too extended, it's got to end. It's like all we're seeing is pullbacks to 200-day moving averages, pullbacks around the 200-day, and then consolidate and move higher. That's a bull market.
And that's how you kind of want to enter new longs in a bull market. Buying breakouts is great, and we do a lot of that. But you can also buy weakness within the context of primary uptrends, right? Particularly when you get a couple months of weakness, maybe, like you said, pulling back to the long-term moving average, and then a little bit of strength off of that weakness. You could use things like dropping a VWAP from the pivot highs. A lot of times, these short-term patterns, the short-term continuation patterns, first look like tops, right? So I brought a couple of these tech subgroup indexes. This is what they look like, I don't know, two weeks ago. This is cybersecurity, internet stocks, and software stocks. All I'm showing here is the reaction leg higher off of the fall lows from last year, and then what's happened since. All year, these have been sideways. Mm-hmm. And you look at this, and you say, that's a bearish pattern. No?
Not for me.
Right. In the context of a bull market, this is probably not a bearish pattern. Markets trend. We know this. What does that mean? Or in the direction of the underlying trend. The underlying trend, and that's why I zoomed out to the October lows from last year, underlying trend is higher. You can look at these necklines, right? You don't have to buy right there. You could drop a VWAP or do different things to kind of pick a higher probability entry. But ultimately, we want to bet on these tops being continuation patterns and resolving higher, not lower. I think we're about to see that with IGV, like you said, already running into its year-to-date highs. And then it has even more overhead supply. If you zoom out on something like software, it's not semiconductors. It's still trapped below the prior cycle highs. I think the bet you want to make, though, with software, internet, cyber, cloud, is that they start to look more like semiconductors in the future. So let's take a look. This was from a couple days ago, software. You see it running up there. I dropped a VWAP from the year-to-date highs. You could use that for confirmation that it's not a top. Same thing in cloud computing. We're taking this out now. And cybersecurity too. These charts are a little bit stale. I think iHack today, it's right at this VWAP right now, right? So I think these are good ways to kind of enter after a period of weakness in a primary uptrend. Just drop a VWAP like that from the pivot highs, and you can enter on like a reclamation of it.
No, I love that because really that's the thing that happens so much as a trend following trader. The thing that people have so much trouble sticking with is the fact that uptrends they consolidate. Like I wish every single move looked like the move from November through December. Like that would be great. However, that's not how the market works. The market comes back, it consolidates sideways. You can't push your time frames on the market. So therefore you have to either figure out, am I a short-term enough trader that I just trade these breakouts and then get out? Or am I a long-term enough trader to be able to handle these consolidations and then move higher? And you just have to figure out how you do it. That's all.
Because there can be opportunity cost, right? So like one fun thing that we've been doing a lot this year is selling puts. Because when you look at a chart like this, particularly, 2-3 weeks ago when we were testing this neckline here and the 200-day moving average, you see the green line that's sloping higher, that's the 200-day. You can sell puts in this kind of a situation because you have more conviction that this level will hold than conviction that price will rebound off it and rally immediately like it did in this case. A lot of times you'll just get kind of dead money for a while. So what we've been doing is you sell puts on the retest of the level. If the level holds, you use the money from the puts to eventually finance calls to bet on a leg higher once you get confirmation that buyers are back in control of the short-term trend. That's where the VWAP comes in. A lot of times they'll look more like this, right? Where, these are the home builders. They just keep hitting this level. Even recently, I guess past couple of weeks now, while software and other these, early cycle leaders have taken back off higher, home builders are still dead money. So if you were long calls or long common against this neckline, you're not making any money. That trade's not a winner right now. If you're selling puts, that trade is a winner. It's becoming more and more of a winner every day, right?
No, I like that because it's just you have to figure out how you do it. Like like futures traders like me, it's because we're in so many different things. I can hang out and sit in something moving sideways and then something else is moving up. So that's how I do it. And then other people, you could just trade that one move higher, get out, try to find something else. But then there's people who are just holding things for the long run. They really like a stock. And then this is a good idea in a way that you can basically just hold the stock, right, Steven? And, you can hold the stock and then just sell puts, on the outside of it, trade around your position and do it that way. So, this is a great idea. I hope some people take advantage of that.
I think you want to find patterns like this in this kind of environment and lean into them, right? Like we said, there are different ways to do that, there are different strategies that you can use depending on your time frame and your risk preferences. Selling puts is not for everybody. You got to keep that super tight, right? If this neckline starts to go, you're going to lose money. You want to be out quick. But in bull markets, I think you want to continue to bet on these types of patterns failing and actually resolving higher, not lower. Use the 200-day moving average to give you like some sort of trend identification. You always want to be trading in the same direction. But, we saw a potential top in Apple a couple months ago. It's up 30% since. We saw all these potential tops and all these tech subgroups. Like software is going to print a top and roll over in the middle of a bull market when semiconductors are up like 200% over the past year. That's not the bet that you want to make, right? And I think you can even take this to cryptocurrency and look at the chart of Bitcoin right now, which is literally looks like this, right? Just scrounging around its range lows, but not breaking them. I think you make the same bet. Bitcoin is just another one of these large cap growth stocks. Something like Solana dug in, and that wasn't a top in Solana. I have that here somewhere. Then it's probably not a top in Bitcoin. I think you want to treat them the same, right? Like we can draw these patterns all over the place right now. Am I crazy, or do you treat them all the same? Can I say that Solana will be like software?
Trade them all the same. I completely agree with that. I was just looking for, because I have a similar chart on Bitcoin, thinking the same thing. You know, trade them all the same. You basically, one, you want to bet on the trend moving up over and over again, because most likely that's going to happen, and at some point it is going to fail, and then you're just going to go, I'm out. You know, like, okay, finally it failed. This is it. It's failing. It's closing under the 200-day. I just can't do it anymore. And then you're just going to start going the other direction or start betting on something else. And same with Bitcoin. You know, we see this massive consolidation up here near the old highs. So basically, you know, that you have that huge level at 60,000 here. It continues to close above that. However, you know, just keep betting on the uptrend until we close below it. Like, most likely we're going to either be range bound, go back to that 70,000 zone, and then break back down again to 60, or we're going to start moving up here. And there's two ways to trade it. One is you could trade it now. You could start buying it here, looking for that move to 70K, or you could trade that breakout, wait for it to get above that, get a close above 71, 72, and then trade it higher. But really, you know, betting against things, and this is a thing that kills a lot of people in bull markets. Betting against things that are in uptrends are a way to lose a lot of money. And it's one thing if you're doing it, like, let's say it's 2022, the S&P's in a downtrend. If you want to short things, go nuts. It's 2024, the S&P is certainly in an uptrend. You want to do the opposite. You want to keep betting to the upside.
Yep, couldn't agree more. And you know what? What a hack is that weekly line chart. With an asset as volatile as Bitcoin, just dumb it down. That weekly line chart just cleans things up. It makes it so clear to us, right? What kind of course of action we want to take. Sometimes you got these daily candlesticks, you got wicks in every direction, you're looking at a momentum indicator. Just get your desk on a Saturday, pull up a weekly line chart, nothing else, just empty. And just kind of scroll through. It kind of brings you back and gives you like context of the primary trend really well.
Yeah, and honestly, that's the only thing I use. It's all my signals come off weekly charts. Everything is weekly, and the reason why is there's less noise. You're not sitting there going, like, when people are in the middle of these, like the last few weeks, especially in some of the commodities were long. There's people freaking out because there's 3% down days, and then there's a move up 4% and so on, and it's just back and forth and back and forth. And really, if you just go, well, I can see the long-term trend is up. My position sizing is right. I'm going to just continue to hold that position. Like, you're going to make a lot more money than the person who's freaking out. And especially, just one more thing, I know you got to leave soon, but when we do when you're a new trader, there's the dance people do where they go, and Lund brought this up the other day. You and I have talked about it before that, but Lund also brought it up, which is you go to the minute chart, you go to the 5-minute chart, you go to the 15-minute chart, you know, and you're trying to confirm like your signals, and you're like, okay, well, if I want to buy this thing, but it doesn't look right on a daily, but it might look right on a 4-hour. Don't do it. Go as long term as you can. Like, actually, one of the best trend following systems that is the most boring system on earth, but it just works, is just buying when the market closes above the 10 EMA and selling when it closes below it. It just works. It's super simple. So keep it simple, keep it very easy, and you're going to have a lot of luck in these markets. If not, you're going to have a lot of problems.
I think that's great trader wisdom.
All right. Go ahead.
I'm done.
Oh, you're done? Okay.
Any week plans for you, sir? Happy Friday.
No, man. Just weekend. We got 4th of July next week. Hopefully do something with the family then. But other than that, just straight chilling. Andy also mentioned that he also loves the weekly line charts. And like, yeah, it's super simple. And like, I think people clown on me about it. Like, they're like, you know, you're so old school with like my bars and like the lines, but it's like, it's just showing me the closes. That's it.
These are some of the things I love about you, Jason.
Simple grandpa status.
All right.
All right. I'll see you.
Bye, everybody.